All right, so I only have 15 minutes to kind of give you guys a analysis for how I think this week's going to be. So just bear with me. This is my plan. If we start from a top-down perspective, right, we're going to start at like the weekly. Okay. Now, what we can see here is we've broken through the great trend line, right? The mother of all trend lines right here. So we broke out through here, and that's how most traders would look at this. All right. And they think that this is bullish action. What I'm actually doing is looking at this to see where's liquidity resting. All right. Now, if we just run a volume profile, let's do it by a fixed range from our top to our bottom, right? Our swing high to our swing low. This is what we're seeing. We have a point of control right around 41.32 in the futures on ES. So if we're at 41.32, our upper value area is right around this level, which is 45.51, and our lower value area is 38.80. Okay. So on the weekly, we wicked up. All right. And where do we wick into? Well, right above point of control into this slight imbalance here. So, okay. That's interesting. Let's go down and do a daily and see what we have going on. All right. So right down here, we established our swing low, and now we have our intermediate high, which we just ran. We also have a higher low right here. And this was where we mitigated this imbalance here. And then we proceeded up to run buy stops. Okay. So this structure is actually slightly bullish. So we're looking for, I have some annotations on the chart here. What we have here is relative equal lows. We have our COVID equilibrium. So we are, since COVID, we are trading into a premium. Okay. We have our daily and weekly equilibrium. So right now we've returned from discount to premium. All right. But that what happened at the end of the day where we rejected down, that's not a good look. All right. So I'd be looking for areas where we could look for continuation, possibly in this imbalance here. And where's our draw? Well, right here we have a premium draw on liquidity, right? From this imbalance. Now, as you can see, we've kind of wicked up in here, mitigated a little bit, and then we've come back down. So if I'm looking at price and saying, okay, where does it want to go to? Well, it wants to draw up to here. So either we are at the complete top, and this is the turning point after running these two lows, a small sweep through buy side liquidity. This is what ICT would call a turtle soup. So because it didn't explode through with displacement, it rejected back down. So this is something to be mindful of. So I would use our daily weekly equilibrium as our pivot. Okay. And just to look at this on a daily as well, let's run a fixed range volume profile from our breakdown, right? This impulse down. And then let's check it how it turned out from after the impulse down all the way till today. Okay. And this is the imbalance that sticks out. All right. Now where it filled in here, that was a slight imbalance as well. All right. So we'll use that. And then let's work our way down. So right now on the weekly and the daily, we are looking kind of bullish. So let's go down to an hourly. All right. Now on the hourly time frame, right, we have consolidation and then we're making this leg up. All right. And every time we've ran, what have we done? We've come down and we've consolidated at an imbalance, right? Filled in every imbalance. So our next one is right here. Okay. And then we'll just to show you, we always do this at the bottom of the impulse to the top of the range. Nothing was filled here. Same thing with like, we'll go from here to that day, right? So because these have held until this gives out, we can't target down here. There's no reason to target down here. We have to go on our draw, all right, which is up above. So right now, let's look at this area and see if there's a spot in here we can get long on the 15-minute. All right. So on the 15-minute, where would I be looking for? Well, I have relative equal lows throughout all of here. So this is sell side liquidity, and I have a fair value gap right there. So on the fair value gap, let's just draw this as a target. and then we'll come back in on a smaller time scale. And we got two areas. So anytime we have two areas, what we can do is we can draw a fib and find out the equilibrium of that. So let's go from the bottom of this candle to the high of that one right above it, because this is a fair value gap, this is a fair value gap, right? So our equilibrium is at 40.89. So let's call it 40.90. So if we can get a return back into discount, right? So anything below 40.90, we would look to add. We would expect this to hold up. And then we would still be targeting our draw. Now, where I got the draw on liquidity from is if I come up to like an hour, right? Premium draw on liquidity and an optimal trade entry on external range liquidity. Now, what I mean by that is if we consider this intermediate high and this intermediate low, right? Everything inside of here is just internal range, okay? But we are marking up. We're marking up with good balance as well, meaning dips are being bought at imbalances, and then we're proceeding to break higher. So unless this was the complete turning point, right, we're going to have to operate under the expectation that this holds. If this doesn't hold and this gives out down here at 40.50, then we have cause for concern, because we could say, okay, well, now we're making a lower low, okay, on the interim. Now, I share my ideas in here, and I said that this is my plan, right, based on this information. I was bullish when we were down here, and I was bullish at FOMC, and I did get picked up at the 40.50 level long. But now I'm looking for entries to short, okay? And I did at our high when SPY was at 416, teetering on 417. I did enter a long put position, just a starter one, though. I'm not fully in that. So what I'm looking for is better entries to go short, but I will scalp upside into that other area. So 15-minute fractal, that's what happened. I'm up like 30%. On the 60-minute, an idea here would be to long the buy side and balance sell side inefficiency at 4100 to 4090. We just covered that. We have to dial in the entry on a break of structure on a smaller time frame. So on the 15-minute or the 5-minute, we're looking for price to return down into that BISI, and then we're looking for a break of structure, change of characteristic, boom, get in, gap and go. And then we're looking to ride it into the premium draw on liquidity, and then we'll pivot. So on the daily, weekly, we just ran some relative equal highs. We are currently trading in a premium, but a return to that BISI will then get us back into a discount. So that's a good entry there to go long. Then we're looking to purge external range liquidity. And then we're using the impulse from the large sell side imbalance at 44.32 to 43.03 as a premium draw on liquidity. Okay, 43.20 is the prior point of control. And what I meant by that is, let's go back to this daily and I'll show it to you. Okay.